This is the Collecting Real Estate Podcast. I'm your host, Stephen Purse, here with your co host, Bill Hamill.
I'm somewhat more comfortable collecting real estate than I am collecting other stuff.
Welcome to Collecting Real Estate. I'm your host, Stephen Purse, here this morning with Bill Hamill.
Hi, Stephen. How you doing today?
Good, how are you?
Excellent.
So today we're going to do something a little different. We've been going property by property through Bill's early investing career. We want to change it up a little bit because we feel like that might be a little boring for the average listener listening to the same type of construction rehab over and over again. So we're going to skip a few properties and jump to a couple of bigger investments for Bill when you start to see the multifamily properties being purchased, the larger ones, and you start to see the business scale. In the future, we're planning on having guests on the podcast to keep changing up every episode and keep the information relevant and new. So, Bill, today we're going to talking about a couple of properties on Lancaster, a couple on Hudson, and a couple on North Allen.
Sounds great. I'm excited.
So first off, how long after the last property we spoke about were this year of big
I
investing?
would say 3 years or so. As we're doing episode by episode, that the years are starting to get fuzzy for me. But I would say 3 years after we bought that 279 Troy Schenectady office, we got into these larger multifamilies in 2005, 2006.
Was this something you had planned out and mapped that projection, or was it something you stumbled upon?
Stumbled upon this. It was just, I guess looking back, it is the natural evolution of just being in the business and meeting different people and just bumping into different opportunities because we are in it 7 days a week. Yes, we are still looking for the same old thing, basically just the next best opportunity, whether it be a single family flip or two family we could put in the portfolio, or whatever that smaller multi-family deal looked like.
So you mentioned knowing the right people and finding it that way. Was that how you got started with these properties?
Yeah, that was it on the Lancaster Street properties. I was not in the market of buying a property this size at this point. It was a phone call from a great friend, Paula, who was also a higher up at the mortgage company that we're both familiar with. And she called me up stating that she referred me to one of the owners who just had an issue with a couple of properties he owned. Not issues with the property, but his property manager had become unable to manage the properties because of a motorcycle accident, and the owner wanted to liquidate, wanted to sell. So she set up a meeting with me and the owner of these properties on Lancaster Street, and we went from there.
You said they were bigger properties. How many units?
We had a 10 unit and a 4 unit, about 6 or 7 houses away from each other, and he wanted to sell them both.
And at this point, you probably had what, 30, 40 units in the portfolio? Just take a guess.
Yeah, I would maybe a little bit more, maybe closer to 60 or so, 60, 70.
And was this an area that you had already been interested in? So when you got that call, you were excited?
I was very familiar with it. Albany's not a huge city, so I was familiar with every neighborhood at this point. I just had my special neighborhoods that I was trying to cluster properties. I had looked at a few deals over the years in this neighborhood. It's called the Center Square Hudson Park neighborhood, right near the Empire State Plaza, Capitol buildings, the trendy Lark Street commercial district. And I hadn't purchased anything in this neighborhood up to this point.
So you're planning on meeting the owner. Did you prepare for that at all? Did you take a look at the properties ahead of time?
I didn't. I was in the mode at this point in my career where I had a lot going on, and I certainly learned a lot from this period of my life because I had so much to do every day, a to-do list that was bottomless, and I was going hour to hour scrambling to each appointment or each event that I had to take care of stuff. So I remember vividly showing up a couple minutes late for this appointment, and this owner is, an interesting guy. He's a great friend. I've known him for close to 20 years now, or 20 years. And he gave me a very interesting greeting, showing up a few minutes late. I can't remember exactly what he said, but it was something that certainly got my attention and was a life lesson on how is it possible that I allowed myself to show up late for this appointment.
Yeah, you definitely meet some characters in this business. So once you got there and he kind of was messing with you for being a little late, what happened next?
Well, we took a look at some apartments. We got to know each other a little bit better. The only reason why I even had an opportunity here was because of my friend Paula. So she highly referred me to Tom, who was the owner, and he was meeting me because she talked so highly of me and described my investing career with Tom. So I believe that he took I had a rapport with him even before we met each other. At least that's the way it seemed.
Okay, let's dive into the real estate. Were the numbers good? The property was good. Can you tell us more about that?
Well, I originally approached these properties as a sales agent. He wanted to sell the properties. I was a broker, and I was not necessarily looking to buy properties of this size at this point. So he was considering me as the sales agent. I got the listings from him only because I told him that I would manage these properties for free as I was selling them for him.
So what changed your mind and made you want to become the future buyer?
Well, we had a buyer within 2 or 3 weeks, and the contract fell through for, kind of goofy reasons, but nonetheless, it fell through. And in that period of time, I fell in love with these two properties in this neighborhood. They were gut job properties in the late 80s. So, at this point, the apartments the buildings looked on the inside like they were at this point less than 20 years old. So you had these beautiful brownstones in historic Albany with floor plans and construction that was rather new. So the rooms were big, the floor plans were excellent, the building materials were good, and it had a historic charm in a historic, charming neighborhood that was easy to find good tenants. So this was the beginning of that theory of that awesome location and great floor plans, and in a location like this with the proximity to the state buildings and those types of jobs really allowed for great tenants, great rent growth, and ultimately easier management.
Okay, it's a great building and a great location and a little bit bigger than you've invested in the past. Was financing it a problem at all?
Not really. I just put my creative hat together. After that first deal fell through, I approached Tom and basically said, would you consider selling these properties to me? I will give you the same bottom line money that the original buyer offered. So at that point, I proposed a higher purchase price than the original buyer offered, but I baked in the 10% sales commission. So I was able to increase the price, but then you bake in the 10% sales commission, and then it brought you down to the amount of money that he was originally going to receive from the previous buyer. So that 10% sales commission, my plan was to use that as part of my 20% down payment. And I also requested 10% seller held second. And he accepted this deal, which ultimately is structured as 80% from the bank, 10% of my down payment came from the sales commission, and then the remaining 10% came from seller held paper. So I was able to get into this deal 100% no money down. And at the time it was a break even, but definitely had rent upside potential. And that's how we were able to get into that.
Such a good example of creative financing for no money down. That's one of the hardest things to figure out in this business. But once you get it, it really opens up some doors. And even if you're breaking even, but you got into the property with no money down, you're still building equity on it right away.
Yeah,
Were
you're
you
building
able?
equity. We had a 20-year amortization, so it was tight cash flow wise for a little bit, but yes, principal pay down, rent growth, and being a very hands-on property manager was very helpful because I kept the occupancy very high, the expense line items very frugal, and it was tight for a few years, but it opened up shortly after, where that rent growth created a much healthier cash flow, and each year on it just performed better and better.
I just want to say that again, 10% seller financing, 10% broker commission, and you got in with no money out of your own pocket. It's really impressive. And you're able to get the cash flow in the future by getting the NOI up. So after this, you transition into some more big properties in the Albany area. The next one I have on my list is 289 to 291 Hudson.
Yeah, this is where we were able to really build the momentum. It was that right place, right time scenario. We bought that 10 unit and the 4 unit from Tom with that no money down scenario. And literally 6 months later, Tom's partner on the Lancaster Street properties contacted me saying, hey, I own another building, 8 units with a parking lot 2 blocks away. Would I be interested in that one? So I said, of course. Lancaster Street is working out very well. And I proposed the same exact deal. He got 10% seller second. He agreed to the commission technique, and I was able to get the same type of loan from the same bank. No money down deal. We were in a similar cash flow situation where same type of building, same quality, same neighborhood, didn't have a big cash flow, but it broke even or a little bit better. And we were able to run that same scenario, no money down.
So good. And I hear about seller financing a lot, on podcasts and speaking to people in the industry. I don't hear the 10% sales commission approach. I think you're the only person I've ever heard that from. Did you come up with that, or did you read about it in a book, or how did you come up with the idea to do that?
Well, it's all part of what me and you had been discussing since we've met. And it's the same discussion I've had with so many people over the years is my resources are different than your resources. My resources in 2005 are different than my resources in 2021. And you can go on and on and on those differences from person to person, time to time. But when you are interested and you've been presented an opportunity and you think that you can make it work, you just have to put on your creative financing hat and say, okay, how can I make this work? how can I make this work where it still has a break even or a positive cash flow? And being a broker at the time, I don't think that I had to brainstorm too much to figure in. I was already the sales agent on Lancaster. So it was like, okay, my commission's going to be this, so it wasn't a stretch to say, okay, wow, if I'm able to give him the bottom line number that some other buyer was going to pay, and I'm already the sales commission, the sales agent, I was just able to work that commission idea, without much thought at the time. And then once it worked once, at that point, I replicate, because, then it's a no-brainer. Let's do that technique again and again and again.
So you didn't have to read a book called How to Use Brokerage Commissions to Buy Real Estate?
No, not to come up with that one. It's a real simple concept. It just went from one relationship to the next, and it was very easy to come up with. And fortunately, it's very simple, and we like to keep it simple. There's no reason to complicate things.
Yeah, it's really good stuff. So is this still the parking lot that you still have that I hear about you trying to rent out certain spots?
Yeah, this is that parking lot. So it's in a neighborhood where parking's a challenge. So this building has apartments on the second level and office space on the first level. We ended up moving our office here for close to 10 years. And we had that parking lot across the street, which was necessary because of the office space. Without that parking, the office space was not rentable in this neighborhood. And, that deal, I was able to purchase the same way I bought the Lancasters. And, Hudson and Dove was a beautiful spot in this neighborhood. And fortunately, that momentum was building.
I guess that's a testament to how good these properties are. When you liquidated your portfolio, you kept these. So moving on to the last properties we're going to discuss today, 104 to 108 North Allen. How do they fit into the story?
104, 108 North Allen was once again, and this is the power of just being in the business. And it just, I'm looking back now, wishing that I was more involved in the associations consistently. So I was part of an association called the Capital District Association of Rental Property Owners, and I was on the board at this particular time. And I had the responsibility of calling all of the members for an event that was coming up. So I had contacted this gentleman by the name of Sam, asked him if he was going to be present at the next event that we had planned. And one thing led to another, where he just told me that he owned this 16-unit building and he was at an age where he was considering selling. And I just happened to be that board member who was just doing my deed for the day, and developed a rapport with this seller, and we worked out the same exact deal that I had worked out down in Center Square.
So all of these properties, all these purchases were from networking.
Yeah, they were from whether it be a great relationship with one person who referred me to her boss, and then the boss's partner on the Lancaster Street, he gave me the opportunity on the 8-unit on Hudson. And, on a completely separate note, I'm just part of an association making a phone call to a member that we were able to talk real estate a bit. And he was just at a time in his career where he was looking to liquidate.
Your group, Jake and Gino, emphasizes the buy right, finance right, manage right. We could talk about managing right for days. You have a lot of experience in that. We're kind of touching on the financing with being creative, but for buying right, it seems like networking, knowing the right people, and being the person that gets the opportunity to buy the building is the answer.
Yeah, especially if you have a rapport built and you have credibility that the seller respects, I guess you can say, because I'm asking them to hold paper. And right up till this day, I don't, it's hard to get sellers to hold paper when they're in the second position, meaning I'm going to a bank to get the first mortgage. They're in the first position. If anything happens and there's a foreclosure, the bank gets first priority on what they're able to recoup on that asset. If there is a seller held second, they're in second position. They're in line, to recoup their investment. So it's not a favorable position. So it is challenging to get that second mortgage from the seller.
What advice do you have to build that trust and rapport in order to get that second note, that seller financing?
Well, it makes it easier when, you've contacted somebody and you have real estate investing in common. So they've owned these buildings for years. It's a big part of, their investment portfolio. Here I come along as a, I don't know, 30, 31-year-old guy who's been investing since I was 21, and we're able to talk the same language. So the rapport building was not a challenge at all. All of these opportunities and these relationships with, these different sellers just came so naturally, where they were just not difficult to persuade, to structure these deals in this manner.
Did any of them have incentive for that? Was there tax reasons why they did it, or was it just to help you out?
I would say both. More was just having an easy sale, meaning, okay, we have this buyer that he's been doing this for a while. He has a degree of success. There's confidence that I'm going to close because of my past. And it was just an easy deal, especially when I was able to get the first one done. Then it was easier for them to feel like I was going to get the next deals done. We were only getting 10% seller held second, so it wasn't a tremendous amount of money. Where for both properties in Center Square that we've talked till now, you're talking about 90,000 on one, and then like 65,000 on another, where there was partners on each one of these assets. So they're just splitting up those types of dollar amounts. So, one guy's holding 30,000, another guy's holding, 60,000 on another property. So as far as, they're saving some from tax liability, but not a huge portion. I think it was more just getting an easy deal done, getting it under contract, getting it underway, and they knew in 2 or 3 months these would close.
It's a lot of good creative financing here. Is there anything you would have done differently?
Not on these. It was a simple deal. They were awesome relationships at the time. It was very exciting for me just because of that momentum and that value from going from one relationship to the next in a short period of time. It just worked, from the Lancaster Street to the Hudson Avenue, to Sam up on North Allen Street, structuring that the same exact way. The only challenge at this point was which partner, am I doing what deals with? So I was just basically having great deal flow, closing on units that I had never closed on before, all in a very short period of time.
Yeah, it's not a bad problem to have. Is there anything you would have done differently?
No, I wouldn't have done a thing differently. The only one I have to add is that fourth deal that we did, after the 291 Hudson Avenue deal, the owner from 266 Hudson Avenue, who is located in Connecticut, called me out of the blue, said, I see that you bought the property up the road at 291 Hudson Avenue. I own 266 Hudson Avenue. It's kind of small potatoes for me. I'm in Connecticut. I work on Wall Street. Are you interested in buying my building? And that was probably the best purchase I had ever made, arguably, where this guy really wasn't paying attention to his 8-unit building. It was vacant and underperforming, not vacant completely, but probably 5 out of 8 units. And by the time I got to him, I was able to get a great price based on it underperforming and knowing the huge amount of upside potential there was there, working out the same deal I did on those previous deals. And this was the final one where this was 5 medium-sized multifamilies in probably a year and a half.
So once again, it's getting in touch with the right person.
Or them getting in touch with you, so just being in the game and doing deals, whether you're approaching the next guy or whether the next guy is approaching you, you never know how it's going to come around.
Yeah, it's kind of like the power of inertia. Once you start going, it's hard to stop. So you got to start, and that momentum will keep you going.
No, and that was great. That was the end of that growth in that neighborhood. But I'm certainly grateful for that year and a half.
Absolutely. It seems like it really, I wouldn't say changed your career, but it put you in the focus of the larger multifamily and helped get you to where you are today.
No, absolutely. It's that stepping stone. It gives you a taste of the larger multifamily and, the benefits to that. It's scaling up, so that's my bio to this point. It was doing all the small properties, which certainly had great value, but then to scale up into those medium-sized properties and, realizing down the road that there was some possibilities on much larger assets.
Get more apartments under one roof.
That's it.
So like I said, in the future episodes, we're going to be having guests on. Excited for that, to hear their stories on collecting real estate. Bill, thank you for sharing today.
Thanks, David.